baby. Good morning. ¿Cómo allez-vous? How are you? My name is Wayne. Yeah, I'm a currency trader. What do you do? Hey, you know what? This doesn't have a webcam running. Let's see if I can remedy that. Oh, it's got an old... Well, that should work, actually. There it is. G'day, mate. How are ya? How's your mum? Hey. Welcome to FXStreet. FXStreet, man. This is month... What is it? 186? Is that right, moderator? 186 months in a row doing this one webinar. I think that's 15 plus years. Cool, right? Yeah, I think that's amazing because I've been doing this one webinar with FXStreet longer than all those other gurus on YouTube that you might have seen or have even been alive. Right? They're talking about getting rich quick and buying Lambos. And I'm like, why don't you, save for retirement and put some kids through college? That's what a man does, boy. Anyway, so welcome to FXStreet Trade Non-Farm Payrolls Live. Yeah. Month 186. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, it's not necessarily indicative of future results, but always stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. So how you been doing? So we got through September alive. Well, in August, did you know, I think I told you, in August I lost 6 pounds. Well, in September, I lost 7 more pounds. Holy crap. So I am beautiful. Because you're my sweet baby, and I want to be beautiful for you. I'm even wearing cologne for crying out loud. And my belt matches my shoes. And yeah. Thank you, Colin. How's Portugal, man? I got to get to Europe and do some beach time. Yeah. So anyways, thank you for being here. How many people here know me? How many people here know me? Been to my webinars countless amounts of time. You've known me. See, I've been doing this webinar for 15 years, but I've been doing forex for 20 years or something. Yeah, where's my team at? Where are my bros at? Yeah. Yeah, Colin, how come I don't see you every day, actually? Yeah, what's up with that, man? Where you been? Yeah. Many years. Very cool. Well, if you're new, here's my style. By the way, my formal introduction. My name is Wayne McDonell. I'm a currency trader. I also like cryptocurrencies. I also like futures, gold, oil, for example. So we'll try to cover all of that today. My education, I have a bachelor's degree in macroeconomics from Harvard and a master's degree in financial management, also from Harvard. I studied alternative investing at Harvard Business School. I studied cryptocurrency with Gary Gensler as my professor at MIT. And then 2 weeks after the course was done, he took over the SEC and now is trying to regulate cryptocurrencies. So yeah, he's the one that taught me about cryptocurrency. So I know Gary and I go way back, just like Angela Merkel spoke at my graduation. So like I know Angie and Gary. Yeah, cool. Well, kind of. And then not long ago, I finished a algorithmic trading program at Oxford. So a lot of that has to do with, it's statistical analysis, but what we were trying to do is teach computers how to trade the financial markets, right? Using things like game theory and behavioral finance, which is really interesting. But really what it comes down to is analyzing trading results, which I'm fascinated by, obviously, as a trader and an investor. So Cool. So, anyways, before that, I was a venture capitalist. Before that, I was on a big nonprofit organization on the board of directors with George Soros. Before that, I worked for a company called NASA, back when NASA was the only rocket company. Before that, I had a newspaper route and sold Coca-Cola at hockey games. So that's me, baby. I also like walks on the beach. I like Thai food. And watching puppy videos and fail army. That's it. That's me. That's pretty much it. Cool. So nice to meet you. So here's the thing. My background, I like technical analysis to confirm market conditions, but before I even need to know, like, what market conditions am I looking for? Well, that's going to be based on fundamental analysis of macroeconomics and monetary policy around the world. From that, I create a bias. You can think of it as risk on or risk off. And from that, I say, okay, I want to buy the dollar, or I say I want to sell the dollar, but I haven't even looked at a chart yet. Okay? Now, the reason I call that strategic trading, right? When I first started 20-something years ago, and when I quit my job as a venture capitalist, I took things very seriously. So what I did is I logged into my trading account. Back then, trading accounts didn't mean charts. You'd log into your trading account and there were no charts. That's it. There was no charts. It basically looked like that. That's all there was on your trading account. Okay? That was basically it. And we had some extra columns, and I guess you could probably put some other columns on here. I don't even know anymore. But one of the things I would look at is overnight volatility. And I'm not sure even how they measured the volatility. Back then, I wasn't even smart enough to think that way. I just saw volatility. Okay, so anyway, so what I did is I did a spreadsheet, and I would line up, Euro USD, Euro Swiss franc, Euro pound, Euro yen, Euro everything, and basically create an index. And then I did that for the pound, I did that for the CAD, I did that for the yen, I did that for the dollar, the Swiss franc, the Kiwi, the Aussie, and so on and so forth. Okay. Much like this, but remember, on a spreadsheet. So it wasn't visual. And then what I would do from that, I could find out, because this is more relative strength and the other one had to do with overnight volatility. So it wasn't this, but in a similar fashion, created a volatility index for every single currency relative to everything. That's why it was an index. So it was recent volatility indices. And I would look at the most positive and the most negative, and then from there try to match them up. So I might say pound, euro. I might want to combine those two. CAD, euro, right? Because I could see euro's the weakest. And the other one I could see is yen. So I'd do pound versus euro, CAD versus euro, AUD versus euro. Kiwi is mediocre, so I wouldn't trade it. Swiss franc's mediocre, I wouldn't trade it. And dollar, maybe, right? And then I'd see this is weak, so then I'd do pound, yen, CAD, yen, Aussie, yen, and skip everything else. So I'd write it all down on paper. Now, back then, a pound yen was probably 12 to 15 pips spread. And then maybe Aussie yen was only 9 pips spread. So I'd say, well, if I had to pick between the two, I might do Aussie first because it's cheaper. Because back then, spreads really mattered. Now, spreads they're so cheap, it doesn't even matter. I don't even think it's a real cost, right? It's so cheap compared to the old days. So that's how I got there. And then guess what? I had all this on paper, not visually. And I would, on my piece of paper, I'd say, okay, look at pound, euro pound, okay, and pound yen. And then I'd look at euro Aussie, euro yen, and maybe euro CAD yen. Okay, got that? And I'd have 6 potential trades. And then, listen to this. And then I would open my chart. And that to me was tactical. So my book, Strategic and Tactical Forex Trading, which I wrote, 15 years ago, a little later than that, 12 years ago. It comes from that methodology where I think about what I want to do first, and then I go to the charts, and then I confirm or deny that market conditions are conducive to carry out that strategy. Is the market ready for me tactically? And so that's how I trade. That's it. There's my secret sauce. We'll just pop that out there. Boom. That's what the Wayne do. So if you want to ask questions on the techniques, the tactical entries and exits and risk management and all that kind of stuff, I'm happy to cover that today. And if you have more questions about fundamentals, macroeconomics, global money flow, central banking policy, so on and so forth, I'm happy to do that as well. Okay? So really, if it has anything to do with Forex, I will do my best to answer your questions. Now, out of common courtesy, I would like to ask you to subscribe to the FX Street YouTube channel. And then give them, not me, give them a thumbs up for hosting us for 15 years. Okay? Okay? Cool. Vishal, though, we could talk about rupee. Yeah, we could talk about rupee, in particular the central bank. Okay? So, yeah, we can cover that later. So here's the agenda. In 45 minutes, we're going to get non-farm payrolls, and we're going to get about 500K. It could come out 250,000. It could come out 750,000. Now, last month, it was down in this area, and that was unexpected. So what we want to look for today more than anything is the revision. Okay? Ansari wants the best entry point for gold. We can look at that in a few minutes, but I can tell you gold has been going nowhere fast. So really, I mean, you can buy it, but if it ain't going anywhere, there's no best entry. The best entry would be to get some volatility and some trade into it, and then notice a breakout either to the downside or the upside, and then catch pullbacks from there. But right now, there's probably 20 different things you could be trading. Now, you might actually be directly, you want to directly hedge gold, or you want to directly buy it and all that kind of stuff. And that would be, well, all I can say is nothing's changed. So any entry point, I suppose, because nothing's changed for about 2 months. But anyways, we'll get to that. Okay, so anyway, so last month was 250K. So my first advice is, I think the headline number this month will come out 500K, but the one that matters will be last month's revision. Okay, so we'll watch that. Second piece of advice, like I said, I think the number will come out about as expected, but the logic and the math and stuff is so that this could really be any number. Like this. I mean, this could be revised up to 350,000 without any problems. And you're like, well, how could you be 100,000 jobs off? It's not very good math. It's fuzzy logic, right? So they're like, well, we had another month and we looked around and yeah, we were like 30% off wrong. But hey, good enough for government work, right? So anyways, so this number could it could be 750. It could be down here again. And so let's talk about maybe the meaning of that, if you don't mind. By the way, did you click the like button yet? Let me check. That's it? Come on. Let me check. That's it? Come on. Yeah, that sounded like an echo. Very cool. See, I'm checking on you. Yeah, come on. Kick down, come clean. Don't be a holdout machine. Click the like up. Like up, buddy. Look, not for me. This is for FX Street. Huh? Common courtesy. What would your mother want you to do? Okay? Yeah. Cool. And thank you to the idiot that did the thumbs down. All right. Cool. So anyways, going back to this, what does it mean if we have a really big number? Okay. Well, the Fed has already announced their schedule for tapering. So really what this would do is change the dot plot. They're like, oh my God, the recovery's crazy. Oh, we're going to have, the Fed will have to raise interest rates sooner, and they'll pull the dot plot in. And oh my God, they're going to do 2 next year. And everyone will get really excited. And that will be bad. That will actually bring the stock market down. Huh. All right. As expected, won't change anything because it's already priced in. And now the lower one down here, 250,000 jobs. What would that mean? Oh no, that's 2 months in a row of a terrible non-farm payrolls. People are not getting jobs. This is so terrible. And it'll push the dot plot farther out. People will say, well, there's no reason for the Fed to raise interest rates. Like, we can't even get people into jobs, and now they're going to taper, and oh, this is going to be so terrible, right? And so that'll push the dot plot out, but that means money will be cheaper for longer, and that will probably push the stock market up. Even though it's bad news, it might be good, right? Okay. Does that make sense? Yeah. So really, I think the big news today is let's see how bad last month's math was. Okay? Cool. Okay, great. Now, I guess, I don't know, like the people that are logging in, what about Aussie dollar? What about Euro? Dude, are you even listening? Like, are your speakers on? You're not even listening? What? And then look, euro's down. Okay. Dollars up, down, sideways up, down. So like you want to talk about that? Why? To me, it's baffling to ask the question. And then what was the other one? Aussie dollar. Okay. Aussie's way up. Dollar's generally weak. So what do you think it's doing? What do you think it's doing? The answers are right here is what I'm saying. Just look at the screen. You have indices. Match them. Look. CAD yen's going up. How can I tell? Look at it. Look at the screen. So anyways, yeah, we'll get there. Okay, we'll get there. All right. So let's do a quick round the world and all that kind of stuff. Okay. I've been around the world and I can't find my trade. All right, cool. Okay. So this is multiple trades, right? Multiple trades. Mohammed says, what do you think about October 18th? Will the money, okay, well, as you should know, they've already extended that to the middle of December. So that's already taken care of. Cool. So you're missing a piece of news, my friend. All right. So anyways, we had oil make a higher high. Then we set this up by looking left to create a higher low, which was a buy. Cool. And then you can see we had this come up to the range. And then I have this set one standard deviation from a mean as another buy, which then created a new higher high. Okay. And then here's the new higher low. And now we're caught up on this resistance as we go into non-farm payrolls. So what it looks like is, generally speaking, it is trending up. And, well, the higher it gets, less likely it's going to go higher. But can you see that? I guess you guys can see that. Let me get my drawing tool out of the way so you can see price. So we're getting pretty close to 80. Okay. We'll probably have to break through 80 next week. Okay. But I'm trading it like this for the moment. Okay, let me update the chart a little bit. Okay, and you can see we're just riding in this range. Right, up here is overbought, down here is oversold. And I think it'll continue trending. I never like these tops, though, like double tops. They really bother me. What I prefer is the higher high, because then I can buy the higher low, and there's no question. Every time there's a top like this, there is the potential for reversal. So I don't like that. I don't like that. What I'd rather be seeing right now is something like this. Okay. Just basically a repeat of that and a repeat of that. And this was a repeat. So oil's been great since I think about 60. Brinsley, you're going to take it down? Yeah, you could. There's two ways to take this down. You trade it like a double top, or you wait for the lower low. I would rather wait for the lower low, and then I would have it rally up to this price, which is 77, and then I would take it down that way. That's what I would do if I were me, if I were a bear. I'm not a bear, so that's cool, but I could see the potential for it. I mean, look, you're selling it off 80. So Brinsley, you know, if you are a bear, that's actually a pretty good trade. Even if you lose money, it's still a pretty decent trade, right? Okay. Cool. Here's gold. You can see gold. You're like, I got a million things drawn here. Well, look, dude, I'm a busy man. Okay. So anyways, let's take a look. We had gold down here at the beginning of August, and then gold down here in the beginning of October. Okay. So this came down September. Okay, down, 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 up, sell, down, 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 up, sell, down, 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 up, sell, down, down, down. Double bottom, we call that support. Can bulls buy support? Yes. Can they buy lower lows? No. But you can buy that. So the next part now. Oh, and I should preface this based on something. Based on fundamentals in this period right here, okay, I'm thinking up for gold. As it's falling, I'm thinking right around there. So that's important, because then you get this big bounce, higher high, big pullback, higher low, and that's a buy. And then you can see I have it all drawn out in arrows, and I expected this to go basically back to 1800. The actual price is like 1790 or something like that. And, well, I got the up, I got the down, and then I got a new up, and then it's been sideways ever since. So, you know, if non-farm payrolls wasn't an event, like, I mean, non-farm payrolls could change everything. But if I was just looking at this technically, right, I already have this marked out. You see here? This is tomorrow's buy price. So you'd buy around 1750, which you would have had today or yesterday. And you'd be taking this up to 1783 or going for last week's target. Okay. So let's zoom in a little bit more on gold. Okay. And you can see the first logic is here. Okay. That's the first buy, which we've already had. And now the new buy is down here, which I already have marked out at 1754. Okay, so that, like I said earlier, that happened, well, today or yesterday. And your target would be about like that. So it's the same trade, right? Lifting off of, so this is a weekly pivots. So this is my weekly buy zone for last week. So Thursday and Friday of last week, we were saying we're way up here, let it fall $25 and buy it down here. That was the trade plan. So a week has gone by, nothing's really changed. We just have a new buy price. And it's, instead of buying it at 45, you're buying it at 1755 or whatever. Okay. Does that make sense, everybody? What do you stink? Smell like a plan? Cool. Master. Good morning, Master Pips. Pippets. And bitty, can't you see? Sometimes your trades just hypnotize me. Let's see. Trading Bitcoin's very complicated. You could buy it at 30. Or you could buy it at 40. Here's the interesting thing. Next opportunity is probably buying it here at 50. Okay, came down, bounced, up, bounced, up, bounce, up. And that'd be that. Okay. Okay. That be that. Those are the most important pieces of that puzzle. Ba 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 da ba doo. Coolio, huh? All right, it's 8 o'clock on Wall Street. Start with, I don't know, dollar pairs. I'll just do dollar pairs. Dollar. Here's our piggy. Yeah, boy. Okay. So the trade plan yesterday was buying there in that green zone. Okay. Somewhere in that green zone. Your stop should be kind of down here somewhere. Looks like it's good enough. I would jam my stop if I were me. Very nice. Okay. You can see this, that I have this here. Okay. I drew that on Thursday, about 3 p.m. on Thursday. Okay. By 3 a.m. on this 15-minute chart, you got the entry. You see that? Cool. So I would say for tomorrow, right now I'm looking here, but the thing is, we're at the beginning of the day, not the end of the day. And also anything could happen with non-farm payroll. So I'm not going to really use this at the moment. Okay. You can see that there's no break to the upside. There's no break to the downside. So we don't really have a trend right now. So I'd have to be neutral on this. Okay. I have to be neutral on this. This was a trade we set up yesterday. So if you're in it now, jam your stop and hope NFP goes your way. Okay. But look, we haven't breached resistance. We haven't breached support. So I wouldn't be shocked if we do one of these today where we retest support, retest resistance, and end right where we are now, which means a lot of people are going to lose money. Because remember that they do everything wrong. Okay, euro dollar, I'm not even interested in. I haven't been interested in buying euro for a very long time. I thought I would be, but it just hasn't set up. So I look at this, and going back all the way to the beginning of September, there hasn't even been a setup. Even if I wanted to buy it, there wasn't an opportunity. Now, there kind of wasn't here, as you can see, but then it quickly collapsed. Okay. And I might have been on this one. I don't remember. And I was looking for this and instead got that, and I just walk away, right? Walk away. Okay, just like that U2 song I was playing. Okay, so I walked away from that one. We're riding this down on the 21. Technically, it's still very, very bearish, but I'm a bull. Everything I have here is set up to be bullish, and because of that, I can clearly see it's not set up. Now, the reverse of that are bears are selling the 21 and making money. Great. Good for you. Good. Doesn't bother me. CAD's been one of the best recently. Very, very happy with Kitty CAD. Thank you. Okay. Sell zone, sell zone. This is out of position, kick off the 21, sell zone. This was tough. This knocked us out of a lot of trades. And by the way, when I mean us, if you're a client of tradersway.com, every day I do a stream for clients. Okay. So anyways, this analysis, because we were actually moving stops right around then, got up, hung up here, but then it's reset, as you can see, or resuming, I should say, and everything's right as rain again. Okay, everything's right as rain. I love CAD. CAD's one of my favorite. Okay. Last Thursday, so not yesterday, the day before, right? A week before yesterday. We analyzed all the markets and came up with that we wanted to buy CAD and buy Aussie, and they've been the two best pairs for those 8 trading days or whatever, eight calendar days. So we got lucky on that analysis. Cool. Taking a look at this one. This is Aussie dollar. This goes back to the beginning of the month, really. Here's a monthly position trade at the monthly M2. Okay. Here's a higher high trade. So, this is after the fact. We got the higher high. So when we were up here, I said, let's buy one down here for a higher low. So there's a second one there. Okay. Which is, I don't know, just whatever trade. And then we got a new higher high and then a higher low, which is another buying opportunity if you want it off the weekly central. And then it's just kind of moved around. I think I had this trade and one other trade, and this giant pullback took it out. This is after the New Zealand interest rate decision. Okay, so that took me out of a couple of trades. And then up, down, buy, up, down, buy, up. Now we're on this resistance and we're waiting for non-farm payrolls. Okay, you see that? Okay. So just waiting for the wind to blow. For the da-da-da, for the grass to grow. Okay. I think Kiwi. Anyways, Kiwi. Yay. Aww. Okay. So anyways. The amazing thing is this candle here actually occurred when New Zealand raised interest rates. A major central bank raised interest rates and it collapsed, which sucked because I had a front run trade at 50 and a scalp, I think, in here on a 50% pullback on the news candle. And, both lost. Well, one broke even and the other one took a hit. So, wow. Okay. 17 Diamond says, bring it down, I think. Well, look, there's no statistics that could confirm or deny that. So, okay. I mean, you'll say technically this was a high and this is a lower high and then this is going to be a lower high. But also what you're ignoring is seasonality that says, well, usually that happens. So I would say all of this means nothing right now. Okay. And this probably has a little bit to do with Australia as well. But, New Zealand shut down their entire economy because one person got COVID, right? So, okay, the currency is being punished for that. Also, China is, in a trade war with its cousin Australia. And it's really interesting, actually, because China's in a huge energy crunch right now. Okay. And they're trying to use clean energy and all that kind of stuff. But in this case, they just don't have enough energy. So they could revert back to, they can revert away from nat gas, which there's a shortage of, and they can say, well, let's just use coal. Great. Coal. They want to use coal again. The only thing is they have a trade war with Australia, and they can't buy Australian, or they refuse to buy Australian coal. And Australia has fantastic clean coal. It's really good coal. And the prices are quite good. But the problem is, A, there's a trade war, and B, there's a shipping glut, right? So there's China's scrambling. I wouldn't be shocked if we just suddenly heard that China makes friends with Australia again very quickly and starts buying up their coal. And if that's true, then Aussie's going to do very well. Okay? Okay? Yeah, well, a little bit of coal doesn't do anybody any good, right? 17 diamonds, but a change in policy would be good. Okay? So anyways, so, let's put it this way. On Kiwi specifically, I think I tried in here. I believe I got this. I think I got this, and then 2 here, and then and and I think when you add up my wins and my losses, I've made 0. And but what happened is it's kind of broken my spirit. I talk about New Zealand betraying me a little bit, so I'm just gonna wait. It just hasn't worked out. And the other ones have worked out great. Great. Okay. So now we are 20 minutes away from the news. That's good. Okay. Aussie's climbing the ladder. Everything's good here. Love it. Love it. Okay, this has been working very well for a while. This pullback was unfortunate, but whatever. It's all good. Everything's going good. Okay? You guys might remember I make a big stink about the 3rd week of September. Okay? And the 1st week of October. And it's worked out really well. You're welcome. Oh, thanks, Greg. Yeah. So that should increase the demand for the Aussie dollar is all I'm saying. Okay. All right. CAD's been working very well. Like I said a week ago. So a week ago we were here on CAD and we said we wanted to buy a higher low and then keep buying all week. And so here's a Sunday open buy. Okay, here's a Tuesday open buy. And then this one collapsed on us, but by Thursday got us back in. So in here there was either some of these got knocked out for profit or this one got knocked out for loss. And then it's climbing again. And I'm very happy. I'm very happy with CAD Yen. Thank you, CAD Yen. I appreciate you. What about gold? How come you weren't here when the webinar started? Okay. So anyways, very interesting. Okay, this is much more sideways than up. And I've been cautious of this pair, just like the euro dollar, but euro yen looks better than euro dollar. So I'm more into it because at least we have a bottom and we call that support. So as a bull, I could buy it, but I did not buy this. I was doing Aussie and CAD. Okay. And Ansari, please quit asking me to make a decision for you unless you pay me money. If you need my advice, okay, don't ask it in a free webinar. Right? Call your dad. Ask him for advice. Up, 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 down, down, up, 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 down, down. You know, this might be starting, but I'm not quite ready yet, and I'm looking at this as more sideways. Okay. Beast. I love the Beast. Beast has been good to me. Thank you. Okay. We go back to here. 1st of October, monthly M2. Okay. Which means our target is monthly M4. That's our conservative target. So let's go take a look at that. Okay. Now, my target's a little higher for a different reason, but anyways, let's look at that. The target is 53.50, basically, 53.50, 153.50, and we started this at 149.50. Oh, yeah, baby. Yeah, it's beautiful, right? So anyways, so that monthly played out nice. Up, 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 down, down. Here's our daily buy zone. Up, 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 down, down. Here's our daily buy zone. Okay, up, 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 down, down. Here's our daily buy zone. So I don't know if you survived this one. But then here's our daily buy zone. Up, 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 up. Here's our daily buy zone. Never quite came down. It's riding to 21. It's so aggressive. Nice. But this is probably because of non-farm payrolls. But I did buy it here, and then I caught another one in this area on a smaller time frame. You can see we had a higher high, higher low, and I believe this was like right at the New York Open. So I bought the dip and snap. It was so good yesterday. I was buying the stock market. I was buying, selling yens and dollars, and yesterday was beautiful. It was worthy of a cohiba. Yeah, nice cohiba last night. One of the last remaining warm evenings. It's going to get really cold here in Georgia. Why you guys like to retail traders? Ashraf says, so you are one of the market makers? No, not a market maker, dude. Would never want to be a market maker. Yeah, it's Aussie's turn now, right? Yeah, cool. And then Kiwi I have trapped. I'm not interested. Don't really want to look at it. Okay. So just briefly, let's just use this chart, I suppose. All right, so let's talk about the high volatility event-driven strategy. Okay. Let's say this is the market and we're waiting for non-farm payrolls and we're watching a 1-minute chart. Okay? And probably euro dollar or something else, maybe euro yen. And then non-farm payrolls comes out and the market immediately goes like this. Okay? What's the trade plan? See, I'm not predicting that. I have no idea. How would I know? Like, seriously. Oh, but let me tell you my guess. I'm not a gambler, bro. Okay? I'm not a gambler. So I know what the trends are. But whatever. So let's just say the market goes up. How are we going to treat this? Well, the first step is to mark this. We call this the line in the sand. Okay? Which I'm hoping is like an Obama line in the sand that you can easily cross. Okay? Cool. Now, what I expect is that there will be a retracement. And this is the whole point of the event, right? High volatility event driven strategy. The HVEDs, as you probably know it as. Okay? So what we're going to try to do is anticipate where the resumption, the continuation will occur. So one way is to look at this and look at it as a role reversal, where this old resistance becomes support. The other way to do it is you can bust out your Fibonacci line and maybe measure this somehow and say this is a 382, this is a 50%, and this is a 618. And somewhere in there is your sweet spot and you want to buy that. Whatever. Doesn't even matter. It's usually the same thing. Okay? And what you're trying to plan on is that at some point, there's a resumption of this trade where the initial response to the headline number or the revision, we don't even know why the market jumped, but the initial direction is picked by the market. We don't trade that. If it was meant to be, set it free. But we are trading a 1 minute chart. So this pullback here to the role reversal could happen in less than 1 minute. Okay. It could be less than 1 minute. Okay. Now, if it does in fact head up, the moment of truth is when we get back to the line in the sand. Because there's two things that are likely to happen here. This was resistance for a reason. Maybe it's a big pivot, maybe it's a big psych, whatever. There's a reason why it spiked and tanked. There's more sell orders up there than there were buyers of the news. So if we retest that, it seems pretty reasonable to me that this could come down hard because the market wanted to fall irregardless of the news. So you want to be wrong in a way where you're able, let's say you buy in here or you buy in here. At least at some point when you reach this line in the sand, you should move your stop to break even. Okay? And by the way, this is straight out of my book that I think was published 13 years ago, which means I wrote it 14 or 15 years ago, which means I had been doing this for longer. Right? So the same technique is in play for 20 years. So what you want to do is when you get to the line of the sand, move your stop to break even. So you're hero or zero, because it could be a 0 day. People will say, oh, that's really good. And then people will say, oh my God, well, if it's good, the Fed will raise interest rates sooner and that will make everything more expensive. And then the stock market's going to come down and all of a sudden good news is bad news. Happens all the time in forex. You have to think about behavioral finance. There is no black and white. There is no good or bad. So good news could be bad news. Okay? So whatever, when you approach the line in the sand, move your stop to break even, and it's perfectly fine to get knocked out for break even. Perfectly fine. You had a free shot at the net. You didn't score. So what? Keep going. There's always a next move, right? However, if this popped for a reason, okay, then the next move here is all these bears. Think about this. When it dropped, all the bears then jammed their stops, right? They moved their stops in close because they're like, oh my God, NFP went against me, right? So they jammed their stops, which means now on this retracement, so you might have a trade here or here. What happens is you get to this level, break the line in the sand, and you hit stops. Stop, 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 stop. Well, those are bearish stops, which means their brokers are offsetting them by going long, and all of a sudden pop. You'll get your first initial payment, not on bulls buying, but on bears being stopped out. Then, you ready for this? The whole thing's going to repeat on a 5-minute chart. So it'll go like this. Pop, 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 pop. And then 2 hours later, we'll probably be right where we are. Okay? What do you think? Okay? So this is a scalp This is not, okay, fundamental. Okay? So when it comes to, I want the dollar to fall, which means pound up, even euro up, CAD up, and by CAD that means USD CAD down, right? Aussie and Kiwi, for example. Okay? I want to sell dollar versus all these things, and the same thing with Japanese yen. Okay? So 2, 4, 6, 8, 10. Those are my 10 favorite trades. And out of that, Aussie and CAD and pound are my top 3 favorite. Cool. Now, that being said, the dollar can get strong today. And I'll probably be knocked out of a whole bunch of my trades for profit. Cool. Doesn't change anything. I'm basing everything on central banking policy. The news is irrelevant because the Fed's already looked at the news and made their decisions. They've already changed the policy, gave us the schedule of the change. The only thing that could change is the headline number so big that they, as I've already explained, they shift their dot plot to the left. That would be bad for the stock market. The NASDAQ's going to get crushed. The dollar will get strong. I'll get knocked out of a bunch of good trades for small profit, which sucks. And I have to take the rest of the day off. I'll walk away. I'm like, there's nothing I can do today. And then try again next week. Okay. You guys excited? Cool. I need a 1 minute break. BRB. Yeah. Trade non-farm payrolls live with FXStreet, month 186. So welcome. Non-farm payrolls about to be released. If you're just checking in, my name is Wayne McDonell. I'm the Chief FX Market Strategist for TradersWay.com, a boutique foreign exchange trading brokerage that would love the opportunity to earn your loyalty and respect. Open up a demo account and they will show you fast execution speed, narrow spreads, huge swaps. And if you need it, world-class customer service, TradersWay.com. If you open up a demo account today, then you can attend my free daily live streams. Just in the back office of your Traders Way account, there's a button that says live webinars, and that will bring you in. So you can spend an hour a day with me. It's usually more than that, but an hour a day with me for free. Very cool. So again, thank you to FXstreet for hosting me for more than 15 years just for this one webinar. I've had a relationship with them longer than 15 years. I'm going to go to FXstreet right now and bring up their calendar so we can get the number. La 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 la. So again, thank you to the moderator and thank you to FXstreet for hosting us once again. Numbers should be out. Remember, we're actually looking for the revision. And a great number is bad, and a bad number is probably good. And it's a terrible number. Yay! Awesome. Cool. Now, we need the revision. Very cool. If someone can get the revision for me, that'd be great. Cool. Yeah. All right, cool. So let's take a deeper dive. First of all, let's go to the indices. Initial response, dollar weakness. Oh, I'm so happy. Right? This is the dot plot shifting to the right, as I explained about a half an hour ago. Oops. So I'm happy with that. That's good for me. Yay. Let's do around the world. Great. Okay. Now, there's that big pullback. Remember we're talking about? Here it comes. You got the pop and drop. Cool. Everything's moving just right. Aussie's lagging though, huh? Look at that. Aussie's not getting through the resistance. Let me drop into a smaller time frame. It's not getting through the top. Cool. Oh, thank you, moderator. All right, so a bit of a laggard. Okay, so that hasn't done anything more for me. All right, well, okay, that's disappointing. USD Kitty Cad just crushing it. Thank you, Kitty Cad. Kiwi also struggling to do anything. But look at Euro. Yeah, I kind of need that. I've been ignoring Euro for weeks now. But that's pretty interesting because I'm looking at this as a higher high. I just might be in the mood for a higher low. That might be worth it. So you could do something like this where you drag in your auto stop. Okay, I already have it. And you throw down what? A 33,333. Okay, and so if I pull the trigger, that's all sort of a done deal. That's kind of neat. Go to a smaller time frame. Danger zone, right? Stranger danger. You see the stop was put there automatically. All right, cool. Interesting. That's just a scalp. Remember, there's no fundamentals behind that. The only thing fundamentally would be the bad number shifts the dot plots to the right, and therefore we got some dollar weakness. Cool. Right on. Now, the stock market should be going up based on this. Because it's bad news, the stock market's likely to go up. Kitty Cat looking great. Love that. Although this green zone is an out zone. Okay. So based on this first move here in the month, the target is 124.87. and we're currently at 125.12. So, and we got pretty close to 125. So we're getting pretty close to the weekly target. Okay. The monthly target, I think you're going to call it what? A central. So there should be room to the downside. That's just the 124.87 or 125 was the projected low for the week. That's all. The actual target is more like 124. Is that right? Forex Pipper says, I missed that one. The CAD was a way better report. Great. Good, because I'm long CAD yen. So let's go look at that. Let's go right to CAD yen. Come on, CAD yen. Come on, CAD yen. Okay, that's all right. Okay, the reason I think it's cool is I bought it yesterday down in here. So up here looks really nice to me. I don't trade USD yen, and they're both weak, so no, I don't want to look at that Zaid. Okay. I mean, look, I'll do it quickly, but I don't want to do it directly because I'm going to be feeding you what you want to eat, and it's the wrong thing. So, Zaid, look, yen and dollar are weak. This is a fundamental move. Trading USD yen makes absolutely no sense. You couldn't pick a worse pair to want to trade. So you got to learn your fundamentals, my friend. That makes no sense. Okay, cool. Yeah. Yeah. Did I cover pound yen, pound dollar? I went through all the dollar pairs, all the yen pairs, commodities. The only thing I haven't done yet are exotics. Cool. So anyways, Aussie yen, let's go back to this one. Okay. In my swing trading group on Thursday, we set this up for a bigger move all this week. So when we met on Sunday, okay, that's Sunday. This was our buy zone on Sunday. This was our, on Monday, right? This is our buy zone on Tuesday. This one was on Wednesday, and that was disheartening. Here's our Thursday entry, and here we are now. The reason I bring this up is the weekly setup, which is this space right here. This weekly setup, which again we were talking about on Thursday on this higher high, so we want to buy a higher low. And that setup said this was our target for the week. So on Thursday, not yesterday, Thursday a week ago Thursday, 8 days ago, we said this is going up to 82. Would that be helpful to you? Would that be helpful to you? 8 days ago saying, oh yeah, well, we're going to go up to 82. If you're interested in learning my techniques, if you're interested in joining my live groups, I have multiple live groups. I invite you to visit FXBootcamp.com. Okay. It's $500 to join. But I can give you a coupon code. Okay? I can give you a coupon code to make this cheaper. $382. You'll learn fundamentals, monetary policy, price action, pivot points, day trading, swing trading, even how to trade with MT4. So if 5 people say they want that coupon code, I will give you the coupon code. If 5 people don't, you guys are not interested, then fine. Don't worry about it. Cool. Ozzy's paying me, Bubba. Come on, go, Ozzy. Go, go, go. Oh, revision is 366. Oh, that's better. Yeah. Yeah. Thank you, Forex Pipper. I appreciate that. Yeah. Coupon code. That's 2. 2 people. Only 2 people. I said 5. 3. Hey, some people here paid thousands of dollars, so they're pissed. And yet they're still recommending it. Is it 4? 5. All right, ready? Here it comes. And by the way, when you're at FXBootcamp.com and you get to the point on the purchasing form where it says coupon code, you have to type it in. Don't paste it. Type it. Here's the coupon code. You ready? Boom. Cisco's up 800 pips. Oh, man, that makes me so happy, Cisco. Good job, buddy. Okay, so CAD's still a bit of a laggard. Maybe it's too much good news. I don't know. Beast, Beast is still like, I don't trust Beast, but we're on tomorrow's buy zone. But when Beast doesn't move, it bothers me. That's a big red flag to me. Uh-oh. Uh-oh. My goal is to survive till tomorrow anyways. Notice, yes, I love scalping, spot trading, swing trading, day trading, position trading. So right now I'm teaching people a combination of swing trading, day trading, and position trading. But yes, we scalp into every particular trade, for sure. Daniel says useless news. It is useless news. Lucas, really? For the first time ever, you're up 1,000 pips, all because of FX Bootcamp. That's cool, man. Now Cisco's pissed off. He's like, I only got 800. Dang it. And good for you, Lucas. Well deserved. Now I feel bad for Cisco. I'm like, Cisco, that's it? What are you doing, Bubba? It's all right, man. Better luck next time. Oh, is that right, Junkie? You broke 1,000 pips for the first time this week as well. No kidding. Yeah. Better than driving a truck all day, huh? I said to Jean-Guy, I'm like, hey, you could go to the UK and drive gas trucks. They'll pay you huge money. And he's like, I will never drive a truck again. I'm like, yeah, I hear you, buddy. Loud and clear. Yeah. Oh, and then 1,500. All right. All right. Now, all right. Yeah. All right. Now it's 1,500. Now Johnny's going to come in. Johnny's got 2,000. And then Ray's going to come in. He has 4,000. There we go, Pedro. Yeah. Oh, really, Pedro? That's interesting, Pedro. All right. So now you got 43 with. That's really interesting. Okay. Stay in contact with me, Pedro. Maybe you're ready. Shine Diva, it's fxbootcamp.com. Where's the coupon code? I already typed it in. It's right here. Here's the coupon code. Ready? Remember, type it in. Don't copy and paste. You're like, well, it's 7 numbers. I can't remember it. Come on, dude. Type it in. All right. So anyways, look, this is a take profit zone for USD kitty cat. If you were conservative, you would say that move is over. Okay, fine, great. So this is the second move. If you guys recall, I said there would be one on the 1 minute, and then the second move would be on the 5 minutes. So we're on the second move. Okay, I'm going to move my stop to break even just because it's a scalp. And we're golden. I'm hero or zero, just like we talked. Yeah, Maida, I know that feeling. I got caught on a couple of those as well. Is the move over for it? No. The move has just begun. So how long do you want to stay in it? Okay. The projected target for the day is 1581. Okay. I'm looking at 1663. So I think we can get just about 100 pips, almost exactly 100 pips out of this. Okay. It's interesting. Oh yeah, my stop's at break even. My limit is way up here. But let me move this in. Okay, right there. There you go. So if I can squeeze this in, maybe this is too much is going on. Let me change this to a very basic chart. Okay, and that's my setup. Okay, so we're already hitting today's target. There's next week, that's Monday's, and then I'm going, my ultimate target is up there. So one, you're like, well, how do you come up with that one? So let me change this then to confluence, and I'll change these indicators a little bit. Okay. Maybe that makes more sense. You see now? So I think what will happen next week is up, down, up. Okay, we're going to be challenged here, aren't we? Okay. Down, up, and out. Yes, -2, -3, that's all break even, yes. Remember, I'll never, ever, ever take a +1, a +2, a +3. If you have a guru that's teaching you how to trade, and then they take profit for 3 pips profit, for example, you should stop following them. They have no idea what they're doing. Okay. Blind following the blind. They're so concerned with their win-loss ratio that they would close a trade for profit and count it as a win. That's so pathetic and amateur. It's sickening that they have people following them. So anyways, that's my personal opinion. Please do another book. I don't have enough time for doing a book. I don't speak. I don't do tours. I don't go to conferences. I don't write books. I don't write magazine articles. I don't go on TV anymore. I just don't have time for that nonsense. Okay? I spend time with my children. Cool. Anyway, so let's see. This is hero or zero. I will count this as a loss. Do you understand this? That's a loss. If I don't make money on this, it's a loss. Yet Theta says this is their selling point, 80% win rate. Yeah, it's retarded. This to me is a loss. What, I took the trade, didn't make any money, but I'm going to count it as a win? It's so pathetic. How could not making money be a win? Embarrassing. All right, so let's take a look at exotics. Okay, cool. So we have Mexican peso set to come down. Ooh la la! We have USD ZAR set to come down. Ooh la la! And we have Euro ZAR set to come down. Ooh la la! Crushing it on the exotics. Lovely to your mum. Cool. Cool. Loving it. That might give us something to do on Sunday or maybe today on the close. Yes, thank you for that, Mohammed. Yes, please have some common courtesy and respect for FX Street for hosting us. They're good people. Please click the thumbs up button and also subscribe and just tell YouTube that FX Street provides quality content. I mean, come on, seriously, click the thumbs up button. And if you think everything I just taught you sucks, then at least have some respect and courtesy to click the thumbs down button. I don't care if you love me or hate me. What, are we going to get married? I'm already married. I already have beautiful children. I don't need you, right? Click the thumbs down button. At least tell YouTube that you're here and you're interacting with me. No, we do not, Meta. No, not on. I give you Sunday at night, but not Friday afternoon. So come on, guys. There should be at least 250 thumbs up or thumbs down. Come on. Coolio. Come on. Come on now. You can do it. What? Your mother would be disappointed. If you don't, she'll be disappointed. She's like, she didn't raise you that way. Going back to crude. Crude isn't, yeah, crude's fine. Crude's good. It's hanging in there. It might be waiting for the stock market, but, its big thing is breaching 80. Okay. Interesting. So that's going to happen in 40 minutes. Cool. We'll keep an eye on that. Going back to gold. I know some of you like gold. Ooh la la. Nice. So going back to gold, here's the double bottom setup from the beginning of the month, which is the day I wanted. So going back in time, guys, I said the last day of September or the first day of October, I need a big green day. How many people can confirm that? that on the last day or the first day, I don't really know which, but on the last day or the first day, I need a big green day. Yeah, I need it, Bubba. I need it. Oh my God. Yeah. Cool, man. So that's what we got. So with the new higher high, we buy the dip right there. So we buy it again. Okay. And I expect it to go all the way up. It went up for a while, but instead did this. And now just before the webinar, I have it on support. I said the old entry was 1744. The new entry is 1755. I actually drew it out, 1755. And ooh la la. Which to me is just a continuation of the original plan. We just moved sideways while we had the event risk. And now that the event risk is out of the way, we're actually doing next week's trade. And I call this front running. And I can teach you that if you join FX Bootcamp. Okay? So some people are like, oh my God, gold's skyrocketing. Dude, this is a trade from over a week ago. So the fact that it's moving now, to me, it slows molasses. You're watching it on a 5-minute candle and it's hard to catch. That's why you should have traded it days ago. Okay? Remember, for those that are newer to forex trading, when you're on the short-term charts only, you oversee things and then you miss the big ones and then it's hard for you to get in. But if you back out on a bigger chart, you realize that this move here was just a logical move, and that would have been your entry. And then later on, it broke out. You're not chasing the breakout because you got in it 3 days ago. You're like, 3 days? I don't sit on a trade for 3 days. Well, that might be a part of trading you need to add. As you mature as a trader, you need to move out and see the real trades for what they are, and then use your shorter term time frames to be able to enter them more precisely. But all you had to do was buy at this price, which we knew last week, and now you're getting paid. Now, but you didn't see the spike. Trying to catch the spike after the spikes happened is very dangerous. It's difficult. Okay? And then here's a little role reversal, which is really nice there. So you need to learn the bigger picture first, I think. Things like macroeconomics, supply and demand via macroeconomics, all that kind of stuff. Now, somebody wanted to talk about rupee. Or is that person still here? This might be a good time to talk about that. Master Trader says, yeah, front running, my favorite. Thank you, Master Chief. Namaste. Yes, Natus. Sure. Okay, the rupee guy's not around? Okay. Love it, huh? Ask a question and then leave. Oh, ahead of the curve wants it? All right. Okay, I'll do that. All right, thank you, ahead of the curve. Okay. We can do that, rupee. Okay, and this has to do with gold. So how many people here care about gold? Where are the gold bugs? So if you care about gold, type in gold. If you care about the Indian rupee, type in INR. Head of the curve, you would get a fail for that. It was a clear question, one or the other. All right, no one cares about rupee. Come on, there's a billion Indians. And yeah, both fail. Thank you, Manus. Manus, do you really? Yeah. I miss India. Yeah. I miss India. I need to get back to India. I need to go to a lot of different places, but India's so fun. All right. So let's clear this out. Okay. All right. Blank. Okay. I drew a blank on what I was doing. I'm like, oh yeah, I'm looking for blank. Okay. So we'll look at India here. India. Right? 27 provinces. Okay. India. When COVID hit and India was shut down, what happened is the Indian rupee got strong because the Indian rupee is sitting out in what we call the interbanking system. Okay? The Indian rupee is floating out in the world, outside of India. It's just floating around the world, available. So the supply of Indian rupee can go up and down and up and down and up and down depending on who needs it. Well, when India shut down, what happened is people realized they're not going to be able to make money because their businesses are shut. They're locked in their apartments. So Indians said, oh my God, we're going to need cash. So they brought money home from foreign investments. This could be people, this could be businesses. But they're like, oh my God, we're shut down again? And it could be weeks? Oh my God, I need cash. So Indians brought money home, which means demand for the Indian rupee went up. Now, you have to look at this as an open global economy, right? So when you look at the chart, it looks like this, where you have the quantity and you have the price and you have demand and you have supply, and demand went up to demand 2, demand for the Indian rupee, okay? Which means we went from Q1, quantity 1, to Q2, quantity 2, which means the quantity increase, the demand, the quantity of Indian rupee demand went up, and therefore we went from price 1 to price 2. The value of the Indian rupee went up, okay, because Indians demanded their rupees and brought it home. So this causes a problem for the Indian central bank because the INR went up in value, okay? Indian products and services are less competitive versus China or Japan or Korea or Vietnam because it costs more in the foreign exchange market for foreigners to buy rupees first and then buy products and services from India. So now India is less competitive. So now the Indian central bank needs to deal with this, okay? And they have a balance sheet. And you hear about the Fed's balance sheet. Well, you know what? India has a balance sheet. We have assets and liabilities. Okay, now the liability side are Indian banks parking money at the central bank and all that kind of stuff. So the liability side is irrelevant, but there's cash deposits here, right? So you have deposits here, and you have cash, which is the deposits, right? So anyways, I'm not looking at that anymore. Okay, there's cash, and then there's other assets like gold, because you know central banks hold gold as well. Okay, great. So, going back to this issue, the Indian rupee has increased dramatically and very quickly in value, and this is bad and against the policies of the Indian Central Bank. So now they need to do something to lower the value of the Indian rupee. Okay? Now, the clever thing is, this is a balance sheet. And, well, it needs to always balance. So what happens here is, let's say the Indian Central Bank decides to sell $1 billion of cash and buy $1 billion worth of gold. So they have less cash but more gold, same amount of assets. Nothing changed. Except what happened. The Indian Central Bank put the cash back into the interbanking system. Okay? Doing what? So look down here. I'll do it in blue again. Okay? What did they do? We have price. We have quantity. We had demand in black, right? Remember? And then we had supply. I'll do it like that. So what happened was the Indian Central Bank put cash in the interbanking system, so supply went to supply 2. Here's the old equilibrium point, Q1, quantity 1, price 1. So what happened is we got an increase in the quantity of cash. Now, the supply of cash went up from Q1 to Q2, and that lowered the price, the value, right, from P1 to P2, and the value of the Indian rupee went back to where it was. Okay? Now, I've been following this for over a year. 6 months ago, India had more gold in the vault than they ever had in the entire history of the Indian Central Bank. And since then, they have significantly more. Other central banks around the world are doing this. For example, Israel has definitely done this as well. Now, Hope says, I trade gold. I don't care about no Indian rupee. Well, you care about gold, so who's buying gold? Who's going to push up gold prices? Central banks. And why are they doing it? Okay? Now, in the future, the issue is not going to be repatriation because of COVID closures, hopefully. But India and Mexico and South Africa and Australia and New Zealand and Korea and many other central banks are going to need to raise interest rates. Raising interest rates will raise the value of the currency, and then many of those countries, if not all of those countries, do not want an appreciating currency because it makes them less competitive. Therefore, they may decide to buy more precious metals. And you're like, I don't care about no Indian rupee. That's cool, but you love your gold, don't you? So who's going to push gold prices up? More importantly, why are they going to push gold prices up? And you'll say, because Wayne said so. This is going to go up another $10, guys. Now will you click the thumbs up button? Was that good? That was good, right? I drew charts on both sides, on the demand and on the supply side. Talked about central banking policy and appreciation, a currency appreciation. I talked about balance sheets. Hey, man, this is pretty good. Yeah, it's not bad, right? Would you rather me talk about yellow Lamborghinis? Answer, he says, then sell? No, I'm not. Yeah, I didn't say that, dude. Yeah, I'm on a jet. I forgot about that one, Johnny. That's pretty funny. Yeah, yellow submarine's better. Yeah, you know you're a baller when you're like, oh, and underneath the helicopter, that's where we store the submarine. And they're like, what? You have a submarine? Yeah. Yeah. Yeah, it's not what your yacht doesn't have a submarine? Really? Oh, you have jet skis. That's, yeah. Yeah, I guess that's cool. All right. Yeah. All right. 9:09. Stock market's going to open soon. Take a look at the indices again. Oh, that makes me so happy. Oh. CAD's ripper strong. Aussie's ripper strong. Yen's ripper weak. Dollar's ripper weak. And I'm buying Aussie, I'm buying CAD, I'm selling yen, I'm selling Aussie. Oy vey, I'm on pound yen. Oh, it's so good. My scalp is still working. Huh? Scalp's doing all right. Flip the Switch says CAD's loving the oil price. Their jobs report was also fantastic. Master Trader, that'd be a compliance issue, and I don't know anything about that. Oh, Vinci wants to buy the dollar. All right, yeah, it could be. Okay. Kind of done, man. See, I can't add to trades, and I'm not going to reduce trades, so I'm kind of done. Like, what are we going to do for the next hour? What are we going to do? I didn't know. Okay, let's see this peso. I wanted to go a little bit lower, but I see what's going on. Okay, so we got the H and S going. So we got to measure this out. Neckline. And then drag this over. Looks like we're going back to the central. That's right, Riyadh. Yes. Yeah. So I tend to buy stocks in certain times of the year. And recently, like, I bought some yesterday. I bought some a couple weeks ago, and a few weeks before that, and that, so that it's just that's what the Wayne do. So yeah. Vinci, that's enough. We got it the first time. Thank you very much. We don't need you doing whatever you're doing. Flip the Switch says, could you comment on the comparison of ADP against non-farm payrolls? Okay, sure. Before the 2008 financial crisis, we were going through, and I was still sort of researching fundamentals and all that kind of stuff. And back then, Kurt Worley worked with me as my quantitative analyst. You guys know Kurt. He's done, I don't know, probably 100 webinars on FXStreet. And now he's I think a chief data scientist at some company. But anyways, I said, hey, Kurt, can you do some research for me quantitatively? Can you I hear on news like CNBC and Bloomberg that the experts come on and they're like, well, ADP was good, so NFP is going to be good. Or ADP was bad, so NFP is going to be bad. And I said, is that even true? I said, Kurt, could you go back and prove it or not prove it, right? Prove it or disprove it. So he went back over like 20 years or something, whatever it was. He went back a long ways, comparing statistically the ADP number with the NFP number. And what we found was it's not positively correlated, which means if ADP is good, then NFP is going to be good. Nor was it negatively correlated, which means if ADP is good, NFP is bad. If ADP is bad, NFP is good. Because a strong positive or a strong negative correlation is tradable. What actually came out is there's actually no correlation whatsoever. Because they're measuring different things and in different ways. So in the case of ADP, it's payroll stubs from small and medium-sized businesses. Okay? So right now, big businesses are hiring and getting workers better than small businesses and stuff, right? So ADP maybe is good, maybe bad, or whatever. But before the government kind of got involved in all of this, there was no correlation whatsoever. The numbers were kind of just unique numbers. Okay? Because when it comes to NFP, there's the household survey and the establishment survey using different methodologies, measuring different things, and then using fuzzy logic to come up with a number, which is way different than what ADP is doing. They're way different. Okay? Completely different methodologies. So anyways, then the government gets involved because the Fed, by government I mean either the Fed, which is a government entity, or or through stimulus checks and that kind of fiscal action. So you have monetary policy and you have fiscal policy, right? And in 2008 and then again in COVID, the government, either through the central bank or through fiscal policy, has been manipulating the market, with good intention, but nonetheless creating a correlation. So, but I think we're getting closer and closer to losing that correlation. Now, maybe there's been 10 years of correlation. If you've only been a trader for 10 years, you're going to say there's a high correlation between ADP and NFP. And I've been around a lot longer than that, and I can tell you, statistically speaking, before government manipulation, there was none, and therefore now as the government is stepping away, we're going to lose that correlation. So there's that answer. Okay? So ADP came out, 500K, and NFP came out half that. Well, there you go. You have been told. Thank you, Vinci. Oh, I see what you're doing. Okay, Vinci, if you blurt anything out again, I'm going to ask to have you kicked. Apparently you're deaf. Okay? Get your own webinar, son. We're not here to have you preach to us, okay? If you have a question, I'm here. All right. All right, so let's get off exotics. Everything's going good there. I want to sell this up high. No word salad. Yeah, that's cool. I like that. You're in trouble. Yeah. All right. So, yeah, man. Waiting for the stock market. Oh, my scalp's going to get knocked out at 0. No, it's actually -2 or something. Right? What is it? -3 or something. No, it's going to be a loss. Oh, my God. What's my take on prop firms? There used to be prop firms, but probably every proprietary firm you can name is a scam. It's baloney, BS, nonsense, suckering in poor people with the oldest tricks in the book. They're not actually prop firms, not even close. If you're going to move to Chicago, okay, and they give you $1 million account and a $200,000 a year salary, then you're in a prop firm. If you're doing something different than that, it's bullshit. Pardon my French. You're getting suckered in. It's nonsense. Garbage, baloney. Get licensed and registered, start your own farm, right? Okay. Yeah. All right. So look, I'm tired. I'm telling you, I'm spent. I don't know what to do. Oh, look at that. Get out of the way there. Stock market's going to go open and I'm done. Yeah, see you on Sunday, Johnny, for the Open. Yeah, stock indices, sure. Lord, I've covered it 2 or 3 times today. So, what's the best, right? It says, Wayne, on your interbank rates you spoke about earlier, what's the best global currency system in your view? What do you mean by global currency system? The difference, Manus, is that the US dollar is a reserve currency, but you have to think about the context of the economic environment that creates the Fed to raise interest rates. Okay? And what's happening in America particularly is that in times are good, when times are good economically, people have jobs, people are getting pay raises, growth is higher than inflation, all this kind of stuff. What's happening, man, is Americans spend money. But the way that the economy has been set up, because it's such a mature economy, that Americans import more than they export. Okay? So think about like exporting. Well, that's what American businesses, they're making stuff, and then they hire workers to make stuff, and then they sell them to foreigners. So the foreigners need to buy US dollar and then to pay that American company, so the American company has cash to pay their workers. Great. But America imports a lot more than it exports. The reason for it is it keeps inflation low. It's one reason why inflation has been incredibly low since the 1970s. Well, I guess more like the 1980s, right? Inflation is getting lower and lower and lower. Well, global trade has been getting bigger and bigger and bigger. So Americans export their inflation. Now, right now, our inflation is supply related, not demand related. So that is a very unique situation and likely transitory in most cases, right? So we'll fix the COVID related supply glut. And anyways, that inflation will go away. But what won't go away is foreigners will be able to make products and services cheaper than American companies can. Okay? It just will be that way. So as long as Walmart is full of Chinese products and Americans go to Walmart to buy, then think of it. When you go to Walmart to buy something, you're actually selling dollars. You're exporting dollars and increasing dollars in the interbanking system. Okay? You're shorting the dollar when you go to Walmart, when you go to Target, like when you go to any retail, right? You're buying renminbi. You're buying. Just think about it. Where are the products coming from? Vietnam, China, Taiwan, Japan, all so on and so forth, right? And so you're buying those currencies and you're selling the US dollar is really what it, right? Because there's a supplier somewhere at Target that says, we need more shirts because you went into Target and bought a bunch of shirts. So now they need to call the shirt company in Vietnam and then cut them a check to say, all right, we'll take 1 million more shirts, and they buy 1 million shirts worth of Vietnamese currency, right? Using US dollars. So you're selling dollars to buy the Vietnamese currency. You see that? So when things are doing good and you feel good because you have a good job, you have a good salary, you feel like in the near future you will continue to have this good job and continue to have the good salary, that we call that the household wealth effect. You feel good, you'll increase your consumption. Okay? And then you increase your consumption. A lot of the stuff is from foreign countries, so you end up selling the dollar. So you have to kind of look at it this way. Okay, GDP is equal to consumption plus investment plus government spending, right? So if you increase consumption, what does this do for the dollar? Well, this is a closed economy, so it doesn't do anything for the dollar. So you have to look at what the United States has. The US GDP looks more like this. GDP is equal to C plus I plus G plus exports minus imports. Because now we're looking at how much do people consume, how much do businesses consume, how much does the government consume, and how much do foreigners consume. See, the United States exports. That means money's coming into the United States for the American products or services, so that this X increases the value of the US dollar. Oh, now we're talking about foreign exchange. Cool. But M is the opposite. Okay, we're sending money out of the United States to import products and services. So this makes the dollar go up, this makes the dollar go down, and then when times are good, M is bigger than X. So you want to look at consumption by consumers, consumption by businesses, consumption by the government. And when these things are good, M is bigger than X and dollar is weak. Does that make sense, everybody? Raymond, it's more quarterly. Yeah. Cool. All right, stock market's open. Ding, 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 ding. Okay. So there you go, Manus. So what you want to look at, Manus, is not just good is bad or bad is good. I want you to look at each country's X minus M inside their GDP. It's called, what drawing tool do I use? It's called Epic Pen. Yes, I paid money because that's who I am. Right on, Manus. Raymond says, correlated with seasonality? No, that's just how you build your clients. That's it. Okay. Right? So your account always looks like this. It goes, that's a year. Right? Because you got to get paid, bro. Right? Give me 20%. Up, 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 up. Give me my 20%. Up, 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 up. Give me my 20%. Up, 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 up. Give me my 20%. Up, 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 up. So every 3 months. And then your client says, yeah, I want to withdraw some of my profits. You're like, no, you can't do that. They're like, what do you mean? No, that's a bad idea. That's a bad idea. I don't think you should do that. No. Oh, this is a bad time of year for you to do that. Yeah. No, you should add some money. In fact, you should add more money. But I need a yacht. You're like, no. You don't understand. I need a yacht. Your yacht's fine. I don't have a yacht. So leave your money in the account. It's all good. Oh, well, Raymond, that's a different conversation. No, not everyone's money goes in the pool. We'll talk about that. I'll fly down to South Africa and we'll get together and we'll talk about that. Just not anytime soon, I don't think. Yeah, you're getting there, Raymond. Faux show. I'd have to look at that LIBOR. Okay, yen's still doing well, so let's go. Yeah, come on, Aussie, come on. See, one of my issues right now is I don't want to watch this because I can't do anything with my trades. I'm not going to take profit, but I can't add to it. And all I can do is stare at it and get nervous, right? Flip the switch is going to do Bonko. It's a Bonko weekend. Cool. So here we are, beast on a roll reversal. This is Monday's trade, by the way. We talked about this before the news came out. Okay. This is Monday's trade plan. So you could try front running it. Okay. Remember, the target for the month is up here, 153.5 or 153 if you want. We're only at 152, so there should be 100 pips north for this minimum. Anybody doing the beast? Yep, MT's on that. Cool. Meta's on that. I want to zoom in and watch that psych level as well. So we got a roll reversal, and then we got the psych level, right? By the way, did anyone use the coupon code yet? Just confirming that it worked. Congratulations to those 5 people. Is that right, Lucas? Yeah, but I mean today. Boo, 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 boo. No. Well, look, so the dot plot is not the taper, but they said no, it might be November, but most likely it will be December where they start the taper. But they said it would end in June, and that's really what's happening. But the dot plot has to do with interest rate hikes, which would be a year after the taper's over, which doesn't make any sense. If you know anything about the Fed, they're not going to do an interest rate hike in June. I think that'd be unlikely. So really, it's a minimum 18 months out, but I think it's already a couple of years out. So I think there's the dot plots are incorrect, and I think many on Wall Street are too hawkish. I think they look at the data and they're trying to make decisions on what they would do, but that's irrelevant. That's not the question. The question is, what would the voting members of the FOMC vote for under Jay Powell? That's a different question. Okay? It's sort of like in the world of physics, physicists are trying to figure out how to make a spaceship move at the speed of light. It's completely the wrong question. A spaceship cannot move at the speed of light, no matter what you do to it. Okay? So they should be trying to create a warp drive, for example, which is not how to make a spaceship move a light year as quickly as possible. Instead, they should focus on how to bend space-time so that the spaceship never moves. So when you're watching Star Wars and all of a sudden they go to light, what do they call it? Light drive? And the stars go whoosh. Well, really, the spaceship doesn't move. Space-time moves. The spaceship stays still. And so anyways, they're like, whoa, that's impossible. Well, you're already trying to make a spaceship move at the speed of light and have the stars stay still. Well, that's impossible. So why don't you focus on a different impossible? Okay, right. A warp drive, but they need to be working on that. So anyways, make sure you ask the right question. I think many people, they're smart people, but they're thinking about the wrong things. Right? Good. Good. So here's a great example. That was just a front run, y'all. It's gone. It's already happened. I'm going to bail at 10. If you got questions, now's the time, bruh. Or should I say brew? Huh? 17 and a half minutes, then sharp. See you, Stevie. Come on, get up there. Giddy up, Aussie. Giddy up, kitty cat. This is good. Me happy, me likey. No, I got knocked out at -3 pips, AR. This, I'm crushing, though. This, I'm crushing. This, I'm crushing. Okay. Cool. Oh, it's so good. Oh, look at that. It's so good. Yeah, good CAD number. %7 unemployment. Just crazy. Lovely. What a great day. What a great week. I love October, man. Favorite time of the year. Yeah, chaotic. Yeah. Yeah, good for you. Right on, Roderick. So who's going to join the FX Bootcamp crew? More than half the people here are already in FX Bootcamp. Are we getting any new members? I haven't been checking my email. I don't know if you're in or out. Did anyone take me up on the coupon code or not? Yeah, I'm not on it, Vincy. Yeah, most people here are already in FX Bootcamp. Yeah, well, make sure you join fxbootcamp.com, type in COVID-19, and you'll save. It's right there, man. COVID-19. Type it in. Even if you don't, it's only $500. I mean, dude. All right, I'm going to get some background music going. It's royalty free. Yeah! Ugh! That's right, 8 p.m. Sunday evening. Yeah, we'll get our swing trade on. Faux show, Mark. Well, thanks for hanging with me today, guys. That was the 186th month of doing this live stream. Huh? Not bad, right? Yeah, they're only 12 in a year, and I've done 186. So your last forex guru hasn't even been alive that long. Okay? Or maybe if they're older, they were playing with Barbie dolls and G.I. Joe when I was already teaching people how to trade forex. And of course, before that I was a venture capitalist, which ain't a bad gig either. It's not like this is my first gig. Yeah, it was. Hey, Hope? Yeah. Everything's just kind of doing what it's supposed to be doing. I'm glad it's holding up over 8150. Here, I'll give you the link to the music. Is that right? Yeah, I've been staying away from Euro for weeks and weeks and weeks and weeks, so it doesn't surprise me that it came back more. Sunday on open, Monday open, and probably Monday close as well. So I have a portfolio manager group, a swing trading group, a day trading group. So I meet with people. I go over the markets 3 times a day. And in between, I'm always on the market. So I never turn my back on the market. Is that right, Master Trader? You went all the way back to the first non-farm payrolls? That's pretty cool. Just to find, I'm looking to find an older one. 124th. Yeah, I'm just looking on, see if I can find an old one to bring up. That's me trading. Isn't that cool? Well, I only got 2 thumbs down today. You guys like that chart setup? Yeah, Miranda's like, nope. I still think it's pretty. Yeah, it's no joke. No joke. It's legit. still not printing them. It's not showing the ask. Look at the volume increase right at non-farm payrolls. Master Trader, I'm also the smartest, best looking, and most modest guru on YouTube. I just couldn't find it, Olin. It just wouldn't do it. So now I put it in black. It was white. All right, it's 10:01. Everything's going good, man. It's a good month so far. Good week, good month. We have lots to be thankful for. I'm thankful for FXStreet. Thank you very much. Thank you to the moderator for moderating better than any moderator has ever moderated. No mediocrity with this moderator, so thank you very much. Thank you to FXStreet. Thank you to you for all the positive energy that you shared with me today and asking great questions. Once again, please visit tradersway.com. Visit tradersway.com, open up a demo account. It'll only take you 20 seconds. And if you'd like to learn my style of trading, please visit FXBootcamp.com. It's $500 to join. If you type in COVID-19, you will save some money. So, cool. Maybe I'll see you over there. So peace on earth. May the pips be with you. May your profits be above average. Have a wonderful weekend.